Good morning. It is Monday, April 14th, 2025. We hope everyone had a nice weekend. Here in Charleston County, the kids are on spring break, all right, which means I get to help out around the house a little bit more than I usually would on a Monday morning, which I don't know, it's kind of nice just to kind of spend some more time with the family this week. But along those lines, forgive me, when you hear, particularly my boys, they're just in the other room wrestling and crying, and so forgive me ahead of time if you hear some yelling from the room next to me. But just quickly, tomorrow, April 15th, IRA and Roth IRA contribution deadlines. All right, so if you're working with our firm, of course, we've been discussing this with you a lot already. If you're eligible, along those lines, also spring review kind of follow-up items, right? So IRA contributions, that would be one of them. We will also be in touch on some of the less urgent follow-up items. Okay, I know like some of you are updating estate planning documents, as well as we're kind of reallocating 401k. So some outside held accounts. So we'll be following up on a number of those. For many of you, this is actually just uploading your tax return once you have that completed. Okay, so find our secure link and upload that, and then kind of in the client portal, we try to kind of cross those off as you go. But by and large, most of you are in a really good spot in terms of action items and the things we've been tackling from this spring's reviews. Okay, markets last week. It's been an eventful couple weeks, of course, in global markets. As for last week, the last 5 trading days, we saw U.S. equity markets, really most markets around the entire world, rebound a good bit. So call it roughly 5+% for most equity markets around the world. All right, so we saw the Trump administration come out with reducing tariffs, right, basically down to 10% for the vast majority of the world, kind of leaving China. There's a lot of kind of back and forth going on there. And then over the weekend, even with China, it looks like some tariffs are going to be exempt for smartphones and computers. All right, so on this, just with the equity futures this morning rising a little bit on that as well. I would argue kind of big picture for today that we're certainly not out of the woods yet. And just kind of, it looks like there's still a good bit of uncertainty. And one way, like I can see that is through something that we don't talk about a lot on this Monday video, but that's the volatility index. Okay, so the VIX for short. I don't know if we've ever really talked much about the VIX, but I thought this would be kind of a good time to bring it up. So what is the volatility index? Well, it's a way you can quantify kind of the fear in the market as a whole, kind of that uncertainty. You can actually quantify it because it's a tool that very active traders use to attempt to hedge downside risk. Okay, and what I mean by that is when the VIX is higher, okay, when it's more expensive is another way to say that. You get a high VIX reading, and what that means is the cost to buy downside protection, whether it be through like put options or other vehicles, those puts and hedging vehicles become more and more expensive as there's more uncertainty, if that makes sense. Okay, so just to put it in perspective, right, when there's very little uncertainty in the market, many times you see the VIX, and it's usually measured by the S&P 500, but you usually see the VIX trade around 10. Okay, so very little uncertainty, like you can see the VIX kind of hovering around 10, maybe the low teens. Okay, so when these most recent trade, tariffs, kind of at the height of the fear toward the end of last week, you saw this VIX index really top. It got up, about 60. Okay, so again, little uncertainty, 10. We peaked at about 60. The previous week. All right, and then so where we stand this morning, again, we've had most many tariffs reduced down to 10%. Now we have the exemption for smartphones and computers. As of this morning, the VIX is at 33. Okay, so that's what I mean. It's still tremendous uncertainty. I would expect more volatility. Yeah, I don't know if the low is in. Yeah, certainly not confident on that in terms of equity markets. So we have a VIX at 33, which shows traders are still pricing a great deal of volatility, likely in both directions in the days and weeks ahead. Again, I know some of you just like more historical context. So just for any nerds out there like I am, so again, little volatility, VIX of 10. Today we're at 33. Last week we peaked at about 60. Okay. During the COVID pandemic, just some numbers, the VIX peaked at about 85. All right, just a tremendous uncertainty. The world's shutting down. And then in the financial crisis, right, in 2008, the VIX traded up around 90. So what does this all mean from a financial planning, retirement planning standpoint? Any kind of goals, short-term ideas that you think you're going to need funds for? Of course, those should never be in the market anyway. All right, so any short-term need, they shouldn't be in stocks anyway. For longer-term assets, 5-10 years in the future, this will likely end up being a decent time to be adding new funds. All right, so maybe if you're a younger professional, and again, I'm not saying the market the low is in. It very well might not be, but if you step out 5-10 years from now, I expect companies to be making more money a decade from now. So likely a decent time to be adding funds. And for those of you that are already in the retirement distribution phase, this is largely what we're doing through the guardrail process. Okay, when markets are temporarily lower, we're using that war chest of cash and bonds for those short-term obligations. So with that being said, definitely we'll be keeping an eye on everything market related in the weeks and months ahead. Certainly feel free to reach out, any kind of questions, comments, concerns. And we hope everyone has a nice week, and be on the lookout for, again, those spring follow-up action items. All right, we'll talk to you soon. Thanks.